Wow. Amen. Hallelujah. Glory be to God. I had to fix a setting, man. What's going on, though, beautiful people? Man, good morning. Good morning. Good morning. What a blessing it is to be alive yet once again. Man, just to experience life. To experience life, man, and just be grateful, man. Just be grateful, man. But thank you guys, man. Again, my name is Jerron Tyler, founder of Posterity.ai, an AI-powered business credit platform that helps entrepreneurs maximize their business funding and business credit. And what we do each and every Tuesday is we come here, we answer questions, we engage, we talk about different cutting edge topics or points of view, if you will, to help you guys continue to grow in your understanding, your knowledge when it comes to business funding and business credit. And so today, what I want to talk to you guys about is something that I absolutely love, which is business, or which are business lines of credit. Business lines of credit is absolutely one of my favorite products in the market. And one of the number one reasons why it is my favorite product is because you only pay on what you use, almost like a credit card. You only pay on what you use. Unlike loans, when you go with a loan, you have to begin paying that loan back immediately. And so, that even in of itself is not a horrible thing, because at the end of the day, we believe that the primary purpose of money is to make more money. And so if you have a vehicle or an investment, or something that you have the capacity to invest in utilizing a loan, and you have to pay the money back starting month one, that's okay. But again, what we teach here at Posterity and Tyler Coaching and Consulting is that you want to garner as much credit as you can before you need it, because it's better to have it and not need it than to need it and not have it. A lot of times in business, we see a lot of entrepreneurs become very reactive. And I use that term almost in alignment to, if you were to go like to the doctor or to the hospital. Oftentimes, when it's like a negative encounter, they would say, like, if you were utilizing medication or you were going through a surgery, they would say, your body did not react well. But oftentimes when it's good, they'll say something along the lines of, you responded well. And so that's what we want you guys to do. That's what we want you all to be able to do in the realm of funding and in the realm of finance. We want you to be responsive. We don't want you to be reactive. We want you to be responsive, so that you're not always being boxed into a corner and reacting to every which thing. Banks can sense, they know, they understand when you are in a situation when you are in dire need of capital. And I never want you to be in that place. I want you to have abundant savings. I also want you to have abundant reserves when it comes to your reserves. And so, with that being said, we're going to talk a little bit about business lines of credit. Okay. Now, I did a video before, prior, talking about the difference between a traditional line of credit as well as a fintech line of credit. Now, what I love, let's just go through the traditional line really quick. A traditional line will generally offer you better terms. Better terms, we're talking better terms from the time frame by which you have to pay it back. Also better terms as far as interest rate is concerned. Now, let's talk about that first piece. When he's talking about time frame about what you need to pay it back, there are some business lines of credit and even some lines of credit on the personal side that say, hey, you can borrow X amount of dollars, but even in you borrowing these X amount of dollars, let's say hypothetically you had let's take it to the board. Let's say hypothetically you were in a situation and you had a $45,000 credit. All right, so let's call it a $45,000 BLOC. You got a business line of credit. Well, let's say you go in and you withdraw the entire $45,000. And once you withdraw that $45,000, you actually withdrew it in the month of September. Let's say you withdrew it in September 2028. Well, according to the terms and conditions, the T&C of this particular line of credit, they're saying that you have to have this entire balance paid off from that first draw. This needs to be paid off by September 2029. Now, obviously, along the way, you're chunking away and you're beating away at the payments. And so by the time you get to September, let's just say if you were making the bare minimum payment that you still owe 37,000. Well, based on the terms of this loan, this 37,000 has to be paid off within that 12-month period. And so this is one of the things that I highly encourage all entrepreneurs to be extremely aware of, because a lot of times you can get where all you see is the number. You see the money, you like, hey, I need the money, I need to go, I need to make a move. But at the end of the day, just because you have access to the money doesn't mean that it's a good deal for you. And even if it is a good deal for you, regardless, you want to be aware of the terms and conditions. I always say that success is not just merely predicated on acquisition, it's predicated on management, right? You can have a 750, a 800, a 900 credit score. You can go out and buy a Rolls Royce. You can buy a $2.5 million home. You can build out studios. You can start businesses. You can become the leader or manager of a company, right? I mean, all of these things equate to success. But at the end of the day, if you're not able to sustain it, because you don't understand the ramifications, or i.e., in this situation, the terms, right? It's not success, right? It ultimately turns into failure. It's almost like the analogy that we've heard, all of our lives. I mean, if I give my 12-year-old son a car, the car is a blessing, but because I gave it to him too early, it ended up being a curse. And so these are the things that I want you guys to understand as you're traveling and journeying along the way, just making decisions in your business, especially financial decisions in your business. And so here, like I mentioned, it is very key and it's very important that you understand the terms and conditions of the products. Okay. Now, on the contrary, you had a lot of loans or a lot of lines of credit that would afford you the beautiful, wondrous opportunity of not paying it back in 12 months. All right. So you have literally, you can ride the loan or ride the line of credit as long as you want. And so what does that look like, Jerron? Well, that looks like you being in a situation where now you have a $45,000 line of credit or BLOC, and you withdrew this entire 45, and you are continuing to pay the payments indefinitely with no end. Okay. Now, this right here is a better option, obviously, because now you have access to $45,000, and this $45,000 is not putting you on a super tight plan, right? Like you can utilize it for as long as you want, as long as you continue to make those payments. All right. And so this is what I wanted to mention regarding terms. Now, I'm gonna kind of jump in a myriad of directions when it comes to the lines of credit, simply because, man, there's so many different nuances to them, so many questions that people actually ask. And so, with that being said, I'm gonna actually write this question up here for you guys. Okay, can my BLOC be decreased? Wow. Ah, all right. So, phenomenal question. All right. Can my BLOC be decreased? Can the amount of my funding be decreased? Absolutely. Now, when you are looking at different banking institutions that are governed by different laws and different regulations, there are different stipulations. Jerron, what in the heck do you mean by that? What I mean is, if you are going to a national bank, if you will, a lot of times they really don't have a lot of grace for borrowers. Okay. So some of the top banks in the nation, a lot of them have stipulations where they'll say, hey, if you are late on your loan product anywhere between one or more times in the midst of 12 months, we will decrease your limit. We'll also increase your interest rate. All right. So let me walk you through what that looks like. Let's say, and you are banking with, let's just say, the number 2 bank in the nation. A lot of times what they'll do is they'll say, hey, we'll give you this 45 grand as long as you the set terms and conditions. However, with this $45,000, if you are late one or more times throughout a year or 12 months, then we will come through and we will lower this 45,000. We may lower this 45,000 to 12,000. All right. Or we may increase your interest rate from 15% to 28%. Right. And so one of the principles that I want you guys to understand when it comes to finance and when it comes to funding, the greater you are, the greater your terms are. The greater you bring to the table, all right, the greater your terms are. Right. Now, Jerron, what do you mean by the greater I bring to the table? What's the great? Okay, the greater is you, your person, your business, your credit score, your credit history, your business, your revenue, your on-time payments. Right? Lenders do not want to lend to somebody that is not able to make their payments. Right? There's in real estate, in the mortgage industry, there's this concept called ATR. Right? And it simply means, the acronym stands for the ability to repay. That's what everybody wants to know. Do you have the ability to repay? If you have the ability to repay, then we are confident and comfortable with lending to you. But in the stretch of in this particular realm, or going down a journey where you are constantly showing us that you are not able to pay, then this right here throws a red flag at us, or from you to us, and it puts us in a position where we do not want to lend to you. Right. And so that's what you want to keep in mind, the ability to repay. But also, if you are borrowing money from somebody, you want to be in a position where you're able to simply give them exactly what they need and what they need on time. All right. Now, next thing, when we're coming here and we're talking about the term, the amounts being decreased, right? This is one of the worst things that can happen, considerably, right? One of the worst things that you could actually go through, because it's like, all right, man, I had my mindset like we had 45,000, we had $50,000, now we don't got nothing, right? So again, you guys want to keep that in mind. Another circumstance that would cause somebody to drop your actual credit score, or drop your business line of credit, is your credit score dropping? Right. So lenders are constantly doing a soft credit pull. Right. If you go to Experian.com right now, there is a section that will show you all of the banks that actually reviewed your credit score. Right. So they can see, I mean, they can look at your credit score. And here's one of the things that they do too. A lot of insurance agencies and companies look at your credit score. Right. They don't do a hard pull. But if you go to Experian.com right now and you navigate the site, it'll show you everybody that's doing a hard pull on your credit. Banking institutions do hard pulls on your credit. Insurance companies do hard pulls on your credit. Your jobs, they do they do soft pulls on your credit, right? So they're doing these soft pulls. And as they're doing them, they're gauging, okay, how much debt do you have? This person looks like they're behind with that bank, and so they're trying to, again, they're always trying to cover their backs and put themselves in a position where they do not have to constantly be in a position, of risking their funds. So that's what we have there. Now, the next one that we have, okay, when you start talking about your actual lines of credit, a lot of people come and they ask me, Jerron, when you start talking about a line of credit, can I go get a line of credit from? You can go get a line of credit from as many banks that would approve you, right? One of the things that I recommend is that when you're going out and you're working on a line of credit, Go apply. People always ask, Jerron, where should I apply? You always want to apply at the bank that you've had the longest relationship with and that you have majority of your revenue with, right? And so if you, even if you work a job, right? Whether you have a business, you work a job, it doesn't matter. Banks operate off of reciprocity. We believe in the law of the seed and the law of reciprocity. I give, you give. I give, you give. I give, you give. And so if you are constantly depositing your job check, let's talk to the employees right now. Your W-2, and you have a constant check going inside of your bank account, whether that's 2,000, 3,000, 5,000, 15,000, 30,000, whatever that number is, right? You have that amount going into that check. Now, once it goes in, the bank now is able to utilize those funds to lend. They're able to utilize those funds to do what they want to do. Now, in this situation, when you go to that bank, let's go. Yeah, when you go to that bank, what they do is they are keeping record and taking record. And so now they're putting you in a situation where you are afforded a greater opportunity to apply for this product because you actually bank with them. And so that's one of the things that I even talk about in my book, 100K in One Day. I talk about going to the bank. What's up, my good people? Yeah, I talk about going to the bank, and once you go to that bank, or I talk about the bank that you should go to, right? You want to make sure that you are going to banks that you already have relationships with. You want to make sure you go into banks that you can actually see. I say, man, if you can see the bank with your natural eye, you can apply. All right. If you can see the bank with your natural eye, you can apply. All right. Next thing I want to talk to you guys about is this component. So, I'm writing BLOCK FinTech. All right. BLOCK FinTech. When you are talking about business lines of credit, I tell everybody this. If your credit is not where you want it to be right now, then credit is based on two things, period. You either have to have personal credit that's on fire, or you have to have income that's on fire. It's one of the two, personal credit or income. And so if you feel like, man, your credit is in a space where it's at a point of no return, it's rough, you got a lot going on, a lot of damage, then I want you focusing on more income. I want you focusing on how you can serve clients more, better, faster, more efficient. How can you sell your product more? Because once you're able to do that, then now you're in a position where you can go get a BLOCK FinTech line of credit. Now, Jerron, what's the difference? Why are you saying I can go get a FinTech line of credit? I'm saying you can go get a FinTech line of credit if you have at least a credit score, right? A FinTech line of credit, if you have a 625 credit score and you make at least $10,000 a month. I want you guys to know, depending on where everybody is on the line, because everybody's in a different space. One of the things that I need you to do if you're an entrepreneur and you haven't done it, because I know it's easy to get on the move, you hustling, you running, but you must deposit that income into a bank account. It has to be deposited into a business bank account specifically. Okay. Now, looking at both of these, you can even come here, and if you're at $10,000 or $15,000, a bank does not care about collections when you are going with a FinTech. They do not care about charge-offs, okay? In a lot of cases, they don't even care about bankruptcies. They will approve you for an actual business line of credit with these particular terms right here. And so, man, that is primarily, you guys know I have coming up next week, man, we're going to lock in with community like never before. So coming up next week, man, I want you guys to be on the lookout. For those of you guys on the line right now, man, a lot of you all have already DM'd me and messaged me Grant, but man, we get ready to open up the portals of grants, man, where entrepreneurs all over the world, man, just be getting access to free money. But the main thing is that you have to be consistent. You have to be ready to go in. You have to be focused. You have to be willing to commit to yourself. A lot of times people want success. They want to garner a thing, but they haven't put in any work. Again, we believe in the law of the seed. In order for you to reap a harvest, you must first sow the seed. You can't reap a harvest without sowing the seed. Everything operates off of reciprocity. I give, you give, I give, you give. But the moment I give and you don't give back, then now there's a breach in the relationship. So we want to keep the relationship strong. We want to keep it tight, and we want to make sure that everybody is on the right path. And so, man, thank you guys for tuning in. And man, let's go. Man, I'll see y'all next week, man.